This year, silver did not just rise in price, it moved like a storm. The price jumped fast, more than doubling and crossing levels no one thought possible just 12 months ago. But the real story is not the number you see on a trading screen. The real story is what happened behind the scenes. Far from the spotlight, China made a quiet move. It was a subtle change in rules and regulations. This move, however, was not small in its impact. It has the power to reshape global markets for a very long time. It could change who builds the future. It could change who powers it. It could change who holds the leverage in a world that is becoming more competitive every single day. We are standing at the end of 2025, looking back at a year of turmoil. While many were distracted by headlines about stock markets and politics, a fundamental shift was taking place in the world of physical commodities. Silver, often called poor man's gold, just proved it is anything but poor. It is a critical, indispensable metal. China's government understood this fact better than most. The new regulations it put in place, set to begin in just a few days on January 1st, 2026, are not just bureaucratic paperwork. They are a declaration. They signal a new era where control over strategic resources is becoming the ultimate form of power. Many people confuse silver with gold. It is an easy mistake to make. Both are precious metals. Both have been used as money for centuries, but their primary roles in the modern world could not be more different. Gold is, first and foremost, a monetary asset. People and central banks hold gold to preserve wealth and maintain trust in currencies. It sits in vaults, largely untouched. Silver, on the other hand, is a worker. It is an industrial powerhouse. It gets consumed in vast quantities, disappearing into the products that define our daily lives and our technological future. Think about the world we are building. We want clean energy. That means solar panels. And every single solar panel needs silver. In fact, the solar industry is now one of the largest consumers of silver, accounting for a fifth of all global demand. We want electric cars. The complex electronics inside every EV rely on silver for its unmatched conductivity. Our digital lives run on data centers. Our digital lives run on smartphones. Our digital lives run on 5G networks. All of these technologies require silver to function. It is a metal you cannot easily replace. There are no viable substitutes for many of its most critical applications. This creates a unique dynamic for silver's demand. To understand what's happening with silver, you must understand the two different worlds it lives in. There is the world of paper silver, there is the world of physical silver. The paper market is what most people see. Prices are set on exchanges like COMEX in New York. Traders buy and sell futures contracts. Futures are promises to deliver a set amount of silver at a future date. The vast majority of these contracts are settled in cash. They are used for speculation, and they are used for hedging. Very little physical metal ever changes hands. This paper system works, but only under one crucial condition. Everyone must believe physical metal is readily available on demand. The system relies on confidence. For years there's been a huge imbalance. Paper claims to silver have far exceeded actual silver in registered vaults. As long as only a few demanded delivery, the game continued. But what if a large number of buyers all want the real thing? What if a major player stops supplying the market and keeps the metal? That is the stress test unfolding right now. A key signal is the price difference between markets. Silver on the Shanghai Futures Exchange traded at a significant premium to the price in London and to the price in New York. In a normal market, traders would perform arbitrage. Starting January 1st, 2026, the government is implementing new export restrictions on silver. It is replacing an old quota system with a much stricter licensing framework. Any company wanting to export silver from China will now need a special government license. This move effectively reclassifies silver as a strategic material, similar to items with military applications. The new rules are designed to consolidate control and severely limit who can export. To even apply for a license, a company must meet a high minimum annual production threshold of 80 tons and prove it has access to at least $30 million in credit lines. These requirements immediately disqualify most small and mid-sized producers and refiners. The only companies that can meet these standards are large, state-aligned entities. In effect, the Chinese government has given itself the power to decide which silver leaves the country, where it goes, and under what terms. These new regulations are expected to lock up an estimated 60 to 70% of what was previously part of the global export supply. That silver will now be prioritized for China's own booming domestic industries. The rest of the world will have to compete for a much smaller pool of available metal. This is not a free market adjustment, it is a deliberate, strategic act of resource nationalism. We have seen this movie before, with rare earths. In 2010, China cut export quotas, and prices skyrocketed. A clear pattern has emerged. Identify critical resources, secure domestic supply, use export controls to gain leverage. Silver supply is inelastic. Much of it is a byproduct of copper, lead, and zinc. You cannot just ramp production. Meanwhile, vaults have been emptying fast. London, New York, and Shanghai inventories have plunged. Glitches and halts have appeared. Around Thanksgiving, a mysterious trading outage coincided with huge warehouse moves. Large players are increasingly asking for metal, not paper. The system is being stress-tested. When physical demand outstrips supply, paper prices lose relevance. That is a massive red flag. The most obvious effect is the price. Silver did not just climb this year, it exploded. It surged from under $30 an ounce to cross the historic $75 per ounce threshold. That is a gain of over 142% in a single year. For traders, it's a windfall. For industries that use silver, it's a nightmare. Companies must either absorb costs or pass them to consumers. From smartphones to solar installations, prices could rise, projects delayed or canceled. Worse than prices availability, some buyers may not get metal at any price. As China hoards supply, companies in Europe, Japan, and North America will scramble for the remaining metal. Expect bidding wars, broken contracts, and production slowdowns. Volatility will scare some investors and attract speculators, amplifying swings. Governments may consider releasing strategic stockpiles, if they have any. This is not just a temporary price spike, it is a permanent shift in the balance of power. We are moving from a world where financial markets set prices to a world where physical control sets advantage. By securing silver, China gains leverage over green energy and advanced technology. It can offer preferred access to allies, restrict supply to rivals, and build influence through resource diplomacy. Others will spend years rebuilding mines, refineries, and research, an expensive race with no quick fixes. Power now includes control of the materials that underpin our technological civilization. Gold rebuilds trust in money. Silver, alongside rare earths, tungsten, and lithium, controls industry. Ask yourself, who will have the physical metal to build the next generation of technology? If you found this breakdown valuable, like the video, subscribe to Express EconGeoFinance Insights, and comment, silver just quietly crossed a line most people weren't watching.